there's two things I find interesting about the Tesla chart. So this is Tesla moving up just massively. Just for full disclosure, I lost money shorting Tesla in 2021 and 2023. I call this the Widowmaker trade. I'm never shorting Tesla ever again. And since I understand liquidity, I'm just never going to short. I'm never shorting any tech or anything like that ever again. But right now we're getting the short squeeze because there was like, what is it, $3.5 billion worth of short positions that are just not being unwound. But so you look at this and you go, okay, this moved on fundamentals, right? That's the idea here. It moved on fundamentals because of what the change with the pay package. But then you toss on something like just a regular moving average or whatever, volume weighted moving average, and then you get to see that the price touched the moving average, and that was the low, right? And that would have been the time to buy. How do you guys reconcile this idea of fundamentals versus technical analysis? Like the technical analysis in this situation gave you a way bigger lead time than if you waited for the story to complete with Elon Musk's pay package. How do you weight fundamentals versus technical analysis?
I don't see them as separate things. There's confluence between the two. The reason we see technical analysis play out is largely because of the market's understanding of that particular company at that particular time. The events and the moving averages play a role together. I think it works in tandem. I mean, you'll see it all the time, right? Like all you need is some kind of event in order to make a decision to put more money into something. And those events usually drive the behavior we want to see in markets. So if it's a Fed decision, then we'll see more activity there. If it's a big news event for a company, we'll see more activity there. It's earnings, so on and so forth. Earning guidance update, all it takes is some kind of trigger. So those fundamentals play a very close and correlated role with the technical analysis we see on charts.
So you're saying that the understanding of the markets, the aggregate understanding of the markets, that this event could be anticipated in the future is what's causing the chart to paint in such a way as to coincide with the technicals. That
sometimes, yeah.
Because I mean, what drives me crazy is that sometimes an event will happen and it'll be legit black swan.
Yes.
Yet it will occur exactly at a technical point, like a major technical support or resistance level of the chart, and you go, I don't understand. Did the aggregate knowledge of the traders have this within their consciousness that this is, the chart should paint in such a way that it should the catalyst should happen around this point? Or is it like, voodoo that's happening where it's astrology, it's tarot cards, and it just so happens that because the chart is at this location, well, now this black swan has to occur?
Yeah. I mean, I guess some part of this is also recency and confirmation bias, though, right? Like in order to really study something like this, you'd have to line up every time the chart lines up with a perfect indicator and that ties to some notable event. And every time that the price changes and there is no notable event, right? So like without collecting the data and looking at it from a truly objective standpoint, it does feel like oftentimes technical analysis is this, sort of magic predictor of where markets were going to go. If we just looked at exactly where this was, we would have seen it. And that's true until it isn't. And then all of a sudden the price rejects these areas that we were looking at, and market price goes a different direction. What I think I'm trying to say is that the two are hand in hand. The reason that market participants show up is often related to fundamental factors. It just happens to coincide with many of the indicators we look at.
I can tell you my personal manual trading approach is I never look at the fundamentals when I'm trading. And if I'm wrong, my stop loss is down there, and that's what gets me out. So I'm allowed to basically take those bets and kind of ignore the news, ignore the fundamentals. And like if I see something bounces off of a trend line multiple times in a row, well, the next time it gets down there, I can put a limit order and a stop loss somewhere down below, and that's the play.
Yep. I remember early on being that way as well. And I remember hearing that that's the way technical analysts should look at markets, is like, forget about the fundamentals, forget about the news. We're just looking at price action. If there's anything important showing up here, it's going to show up on the chart. All right. That makes reasonable sense to me. But as time went on, I think I became more of what Nicholas Darvis would call a techno fundamentalist, or a techno fundamental trader, where I'm combining both together because the fundamentals are going to give me more confidence about the trade itself. I want to
Definitely.
look at specific factors to confirm that this company or this asset is heading in the right direction. And I think that that's probably true for other market participants that are either solely fundamental or some mix of the two. Those fundamentals are playing a role in price action as well.
It's like another filter, right? That could cause you to get the timing more correct.
Sure.
And
Yeah.
miss some of those ones where it fails.
I mean, we're kind of doing that right now, Tom, with the global liquidity index, right? I would count that as a fundamental screener for current market conditions. We want to see that there's at least an increase in global liquidity to give us more confidence that the trend is heading in the right direction.
So that's the problem I'm having, where the liquidity is the only fundamental that I care about.
Mhm.
And everything else, I mean, I remember sitting there learning how to do, how to calculate valuations for different companies, and it just doesn't work anymore. Like, it doesn't seem to matter. If the passive investment flows don't go into my value stock, well, it's not going up no matter how much I think it should.